topic of the outperformance solutions for key clients, because I believe that in current financial industry, the word solution is too much is not sufficiently a focus, and we tend to add more problems than solutions, especially from the banking side. So this is for any banking organization or financial asset management, multifamily office structure, doesn't matter on the size. The key priority today, in our opinion, is to be able to provide solutions, because the environment is getting more and more complex, difficult at very multiple levels. You know, clients are becoming more and more institutionalized themselves, therefore much more demanding of technicity and elaborated financial solutions, products. The regulation is becoming more and more constraining, difficult, complex, and I would say, rigorous in case of deviances. So you need to be extremely careful as client, as financial institutions. Cross-border issues, level of sophistication of clients becoming higher and higher, especially on the ultra high net worth segment, which is the segment that the company Amberline Partners we created 3 years ago in Zurich is focusing on today. And last but not least, the emergence of a new generation of customers, the children who are 30 years old, who don't, 30 years old plus or minus, who don't think the same way as their parents who created the net worth of the family, very often in Eastern Europe. In case of Western Europe, it's of course very different. The net worth of families tend to be more historical. And those young generations, they are asking for new, more high-tech related solutions. So for all those reasons, it's today so important to offer our clients real solutions. And the solutions we are proposing can be divided, in my opinion, in two main typologies. The first one is about the organizational structure you are offering to the client. The second one is about the substance, the content. In terms of organization, what we see way too often, in my opinion, is structures which tend to accumulate bureaucratic processes that make the life of clients more complicated than real, solution-driven. And this is key, because if the organizational setup is not adequate to accommodate for fast decision making, but at the same time managing your risk and your reputation, you go basically against history, and there is no other option than losing market share instead of growing. So that's the first thing. Maybe I give you a very quick historical overview of the way we created our company 3 years ago. We are basically 5 partners in Zurich who decided that becoming independent and working on behalf of the clients would serve their interest in a much more efficient way than continuing to work within the bank. And very often, when family offices such as ours, multi-family office, are being set up, they tend to basically replicate the same mistake. You have few front people who, basically are driven by clients. They bring the clients, but they very much from the start forget to focus on the infrastructure they need to build to serve the most adequately and efficiently those customers. So we decided from our side to do the reverse process. We wanted to be very well prepared, very well structured, with risk management people, with compliance, with a few very senior portfolio managers on the investment side, instead before onboarding the client, instead of vice versa. So that's something which, in my opinion, is essential. The second thing, for best servicing clients and providing them solution, is to always focus on risk management. At the end of the day, our customers want us to preserve their capital and help them to make sure that the transfer of network through generations is going to happen. So of course, some clients are more risk takers than the others, but the concept of risk management is key in whatever we're doing for our clients and for ourselves, including for our own reputation. More and more multifamily offices such as ours are offering another type, and this is still on the structure side before getting into the substance itself. Are offering more and more facilities, software, direct access for clients to asset consolidation for portfolios they have split between different banks. So basically, what does it mean? Today, let's imagine we onboard Mr. Ivanov as our new client, and Mr. Ivanov, for managing his portfolio or helping him to control the risk within the different portfolios he's splitting between the different banks. Basically, what we are offering, and this is something that this is a new trend, and it's not, we didn't reinvent the wheel here, but this is a growing trend which we think is extremely precious for the client. We are offering what is called asset consolidation, reporting consolidation, meaning that let's imagine he has accounts at bank A, B, and C. For him, it's extremely difficult to understand what's the big picture, especially if there is a lot of trading activity with the accounts. What are the bulk risks he's taking? What is the consolidated asset allocation he does have, when he looks at all the portfolios taken together? What are the risks, basically, on a consolidated basis he is taking? So that's another type of solution for key clients that we think is a fundamental added value in today's current environment. Now, in terms of substance, I would like to say that there is probably 4 elements that for us are intrinsic, constitutive part of the solutions for especially high and ultra net worth families. The first one is valid for everybody, including retail clients. It's the concept of alignment of interest. So, what does it mean in practical terms? Working in different banks, the biggest ones in Switzerland and Europe, over the last 25 years, our team realized that very often clients were very dissatisfied by the fact that on their portfolio, whether the performance was positive or negative, especially negative in case of market going up, the banks or the asset managers taking care of them were still charging management fees, and here we have clients for years already who feel a very bad taste about it, because what does it mean? It means clients feeling is getting milked by the financial organization. For this reason, for alignment of interest, especially on the pricing structure we're offering to clients, is a very important concept. And we decided to offer our clients the option of keeping management fees, like a standard, fee structure that almost everyone has in the market, or work on a performance fee basis only. And this is something that very few players are actually doing, and where we actually are able to make a very big difference, because the client see here, especially where we manage to agree with him on the ways to mitigate the risk inside the portfolio. This is very important. Otherwise, alignment of interest doesn't happen. You are too much incentivized to take risk on behalf of the client, and this doesn't work. But if you are able to put in place risk mitigators for the management of the portfolio, and at the same time a performance fee only fee structure, this, in our opinion, is what alignment of interest, especially on the fees, on the pricing structure side, is all about. Open architecture. That's the second concept linked to the substance of the offering for key client solutions. Once again, many banks, financial organizations have been talking for years about the concept of open architecture. Open architecture means you basically look in the market for the best investment product or best investment solution. It doesn't need to be your own product, and you basically will serve your client based on this one. Very often the case, however, is that open architecture doesn't exist. And we think it's essential, whether it's in terms of form selection or even in terms of structured product, inception, creation of structured product for a client. So not every client is from a structured product, but for the ones who do have this appetite, I mean, we are offering a very exclusive platform here out of Zurich. Just to give you an example, we're not the only one, for sure, which gives our trader and portfolio managers direct access to pricing from about 40 investment banks throughout the world on in any specific time and on any specific, for example, reverse compatible structure. So that's the second very important concept. The third one, in terms of substance, is offering client expertise into thematics that count for them. And we have identified over the last years 2 essential thematics for our client, and we believe that this is something which is not only for our client, but where especially ultra high net worth family are very sensitive to. The first one is technology. The second one is ESG investment. On both ends, we have hired top experts already for years who give clients and give actually our portfolio managers as well a strong insight on the big picture. What are the subsectors within the information technology that we believe are going to outperform, and where our client should be focused on. I'll give you an example. On our side, we strongly believe that cybersecurity, cloud infrastructure, Internet of Things are the 3 elements where our clients should be focused today. The fact that we have also within our structure top experts in technology coming from the industry itself, with a deep knowledge on the product, not investment product, but the technology product, on the teams, on the management, on the after-sale capacities of those companies, gives us and give any company who would follow the same strategy a real edge to the competitor. The same strategy we applied on ESG investments by hiring a lady who is today the scientific coordinator of Lafarge Holcim Foundation on Sustainability. And to have such people on board makes a difference towards our clients. And on one hand, it gives us a lot of credibility, and it provides on the top of that, very important, the right solutions in terms of identifying the trends and the right picks we're making. And the fourth element that I wanted to highlight today is venture is not related to financial markets, it's venture capital. Being able, and this is something where we are at a relatively early stage, but we identify this as an essential element. Being able to bring clients deal flows, serious deal flows on the venture capital, especially in technology, but also being able to give our clients second opinions regarding such investment that anyways they would like to realize by themselves. This is real added value in our opinion, and this is part of the set of fundamental solutions that I would have liked to just to mention to you today, that we think should be the focus for key clients.
Next question, from your experience, could you give a few life hacks or practical answers about what the investment strategy is better for the client nowadays in our worldwide?
That's a tough question, but look, I would like to say something extremely important here. There is no ideal strategy in the current time, and there has never been any ideal strategy. The thing which is fundamental and that asset managers or bankers tend to forget is listen to your client, understand what are the needs of your client, what is his risk profile, what are his expectations in terms of returns, what is his tolerance to the downside in the portfolio, what his liquidity needs, what are these liquidity constraints. A client who tells you, for example, that he won't need the money that is in the portfolio that you are managing for the next 5 years, has a profile which is very different from a client who basically tells you, tomorrow I might need to liquidate all the assets because I might go to some real estate investment, or I want to buy my next yacht, for example, and that's a very high priority for me. So that's very important. I don't believe there is real unique strategy. We tend to focus, and that's very important, especially in very volatile market. We saw it last year. We are going to see it again this year. There are few very, very important elements. One is diversification. Avoiding over concentration in your portfolio is a key priority, because this is where all the disasters usually happen in terms of management. And diversification is not only in terms, doesn't happen only in terms of idiosyncratic asset selection. For example, I choose Microsoft and I decide to diversify with Intel and Apple. It's not only about this, it's also about diversifying and thinking carefully about your global asset allocation, about the sectors in which you want to be or not to be, and trying to create the right balance. And everyone has his own different balance, but you need to think and discuss with your asset manager what is the optimal solution. So, I would like to give you more tips, very concrete tips in terms of where to invest today, in our opinion. I could have brought our CIO here, but this is another discussion. I think here, very important is listen to your clients. Try, even if they don't express it, to get the information from them. What is the real risk acceptance? And from here, you will build the theoretically ideal portfolio. I don't know if I answered your question rightfully or not.
Avi, thank you so much. It was a really good answer.